Today on Technically Speaking with Jim Wyckoff, we'll be talking about gold's volatility, the upcoming ECB and FOMC meetings. Stay tuned. As always, joining me today is Jim Wyckoff. Jim, thanks for joining me today.
Hello, Alex. Good to be with you.
So Jim, in the last few weeks, we've seen quite a bit of volatility since that enormous collapse. Technically, what is gold looking like?
Well, we are seeing the bulls starting to repair some of that major technical damage. The bulls have some more heavy lifting to do. We did see prices on Friday hit a two-week high. We've seen prices rebound well up from the April low from the collapse in prices. So that is indicative that the bulls are working on a near-term bottom. And my bias is that we have put in a near-term bottom in the gold market.
And moving forward this week, Jim, we have a couple big meetings coming up, the ECB and the FOMC meetings. What do you see coming out of them?
Well, the Federal Reserve Open Market Committee meeting that ends on Wednesday is likely to produce no changes in interest rates. However, as is the case in the past, we're going to look very closely at the wording from the FOMC statement, any nuances that might signal whether QE can proceed into the coming months or longer, or whether the FOMC members are working to scale back. My inclination is that QE will not be stopped anytime soon. We've seen some recent weak U.S. economic data that's probably going to prevent that. Now, for the ECB meeting on Thursday, there is some significant talk in the marketplace that the ECB might lower interest rates based upon their weak data that they've seen recently. So from a gold market point of view, all this is auguring in the favor of the bullish camp.
All right, Jim, let's move on to your Wyckoff market rating for gold and silver.
Alex, this week I'm giving gold, or today actually, I'm giving gold a rating of 4. We were moving up the scale. Last week was 3, this week 4. We got some more work to do by the bulls to push that above 5 to turn it into neutral to bullish territory, but the bulls do have some near-term momentum on their side. As for silver, I'm giving silver a 3. Silver has moved up from last week, but still silver bulls have quite a bit of hard work to do to suggest that a near-term uptrend can be sustained.
All right, Jim, let's finish off with some support and resistance levels.
Support and resistance levels for gold and silver. We'll start out with gold. Gold has solid technical support at the $1,400 level. You produce multiple closes below that price level, and you put the bears back firmly in command to suggest still more downside price pressure, including a new for-the-move low. Solid overhead technical resistance for June gold is at 1,500. You produce a close above 1,500. That's going to invite fresh technical buying interest, probably set off some buy stops to produce still more upside price pressure. For May silver, actually for July silver, we see solid technical support at the 23 level. We see solid overhead technical resistance at 25.
Excellent, Jim. Thank you for joining me.
Can't wait till next time, Alex. Bye-bye.
And thank you for watching this edition of Technically Speaking with Jim Wyckoff. Coming up for Kitco News, we'll be at the Metals and Minerals Investment Conference in New York City, May 13th and 14th. You can register at the link below if you're interested. Also, you can leave your comments and questions at newsfeedback@kitco.com. Also, you can follow me on Twitter at Alex_Letourneau. Thanks for watching.